Using moving averages to identify trends in Forex trading. Introduction. Moving averages are a popular and effective tool used by Forex traders to identify trends and analyze price movements. They help smooth out price fluctuations and provide valuable insights into the prevailing direction of the market. In this text, we will explore the concept of moving averages and how they can be effectively utilized to identify trends in Forex trading. By understanding and applying moving averages, traders can make informed trading decisions and improve their overall trading success. Understanding moving averages. Moving averages are calculated by taking the average closing price of a currency pair over a specified number of periods. The most common types of moving averages are the simple moving average, SMA, and the exponential moving average, EMA. SMA gives equal weight to each data point, while EMA places more weight on recent price data, making it more responsive to current price movements. Types of moving averages. Traders can choose different periods for moving averages depending on their trading style and time horizon. Short-term traders may use shorter periods such as 10, 20, or 50 periods to analyze recent price movements. On the other hand, long-term traders may use longer periods such as 100, 200, or 250 periods to identify broader trends. Identifying trend direction. One of the primary uses of moving averages is to identify trend direction. When the price is consistently above the moving average, it indicates an uptrend. Conversely, when the price is consistently below the moving average, it indicates a downtrend. Traders can visually observe the positioning of the price relative to the moving average to determine the prevailing trend. Golden cross and death cross. The golden cross and death cross are important crossover signals formed by moving averages. The golden cross occurs when a short-term moving average, for example, 50-period EMA, crosses above a long-term moving average, for example, 200-period EMA. It is a bullish signal and indicates a potential uptrend. Conversely, the death cross occurs when the short-term moving average crosses below the long-term moving average, signaling a potential downtrend. Moving averages as dynamic support and resistance. Moving averages can also act as dynamic support and resistance levels. During an uptrend, the moving average can provide support, where price bounces off the moving average before continuing higher. In a downtrend, the moving average can act as resistance, capping price advances. These dynamic levels can be used to identify potential entry and exit points for trades. Analyzing moving average slope. The slope of a moving average can provide additional insights into the strength of the trend. Steeper slopes indicate a stronger trend, while flatter slopes may signal a weaker or ranging market. Traders can observe changes in the slope to anticipate potential trend reversals or trend continuation. Combining multiple moving averages. Intermediate traders often use multiple moving averages of different periods to gain a more comprehensive view of the market. For example, the 50-period EMA can be used to identify short-term trends, while the 200-period EMA can identify long-term trends. When both moving averages align in the same direction, it provides stronger confirmation of the prevailing trend. Using moving averages with other indicators. While moving averages are powerful on their own, they are often combined with other technical indicators or chart patterns for increased accuracy. For instance, traders may use moving averages with oscillators like the Relative Strength Index, RSI, to confirm overbought or oversold conditions and potential trend reversals. Conclusion. Moving averages are a versatile and valuable tool for identifying trends in Forex trading. By analyzing the positioning, crossovers, slopes, and dynamic support resistance levels of moving averages, traders can determine the prevailing trend and make informed trading decisions. Combining moving averages with other technical indicators and chart patterns further enhances their accuracy. With practice and experience, traders can master the use of moving averages